In this video, I will be talking about Chapter 12-5, and it's posting from journals to a general ledger. And so they mean multiple journals and, in particular, special journals. So we have a couple of objectives. Our main one is going to be to post from a cash payments journal and a general journal to a general ledger. So we are going to start out with starting a new page for an account in a general ledger. So we know that this is what a general ledger page looks like, right? This is from Chapter 5. This is what it looks like. This is just our general ledger. If this was going to be our accounts payable ledger, this would say vendor and vendor number. If this was going to be our accounts receivable ledger, this would say customer and customer number. But it doesn't. It says an account number. It's our general ledger. The other thing is, if we look right here in these balance columns, we have a debit column and a credit column. If this was our accounts payable ledger, we would have just the credit column for the balance. And if this was our accounts receivable ledger, we would just have our debit balance column. So, but we have both. This is called a 4-column ledger. So we're looking at this, and the amount of entries that we can put just depends on the number of lines in the ledger. And so say that this ledger cut off after 1, 2, 3, 4, 5 lines, right? That means that every 6th transaction, we would start a new ledger page, which would be absolutely crazy. It would take forever to get through posting because we'd have to have so many ledger pages. So you'll see, I think it's in 12-5 of your work together problems, that there's something like 25 lines in the ledger page that we're working on. So there are quite a few lines in there. But when we finish out a ledger page, we have to bring that balance forward to a new page. And so this is how we start a new page. What we do is we write the account title. For this one, it's cash. We write the account number, which is 1110. And if you guys have no idea where we're getting these account numbers from, they come from a chart of accounts, right? And I'm looking, let's see, in our book, this chart of accounts is on page 219. So you can go look at page 219 and you'll see what all of the account numbers are. So we're going to write our account number. We write the date. So this is the day, the 2013 November, the first day. This is the day of this balance, right? So we filled up the last page and we're going to bring this balance forward to a new page. And so this happened on the 1st of November, conveniently, right? We write the word balance in the item column, so this tells us that we brought this balance from a prior page. And then we put a check mark and post ref. This check mark tells us that the amount has been carried forward from a previous page rather than posted from a journal. So that's what that means when it's in the ledger. Now, if that check mark is in a journal, it means that we don't post the balances individually. But when it's in the ledger, it means that it was carried forward from another page. I know a student asked, and I talked about this a little bit in the work together problems, why don't we use carried forward or brought forward for the end and the beginning? And I really have no idea why it's not done that way. It's just balance. And it may be because we keep running balance anyway. So if somebody wants to look that up, I can offer some bonus points. So we have our check mark and post ref, and then we write the balance from the prior page. So our balance is $17,647.44. So we got that from the previous page that we finished. We don't have page numbers, right? They just go one page after another in our ledger. And so it used to be that a ledger was like a physical book, right? That you had to pull out all these books and you had to add in new books when you filled up a ledger. And so you had new pages, and say your business was growing, then you might run into a problem that you only allotted a certain number of pages for cash, and then you started running into like your accounts receivable. But now this stuff is all done on computers, and so it's not such a concern that you're going to run out of pages or run out of room necessarily. And I mean, you do have a dedicated number of pages, like you can see in the work together. There's a dedicated number of lines, not pages. And so we can keep adding pages because it's an electronic document. So we don't really have to stress about running out of pages so much anymore. So, and this was the process. Write the account title, write the account number, write the date, write the word balance, put your check mark, and write your account balance. And of course, cash is an asset. It has a normal balance of a debit. I don't need to go back because you guys can pause. Yay, the magic of technology. So we're going to talk about posting from the general amount columns of a cash payments journal to a general ledger. If you recall, this is a cash payments journal, this top one right here. We're on page 21. If we look at this, this means that somebody gave us cash, right? Oh, wait, no, it doesn't. That would be cash receipts. What this means is that we paid out cash, right? Cash payments, it's from our perspective since we're the business, so we paid out cash. So if we look at this, this says account title, purchases. So that tells me that we purchased merchandise to sell on November 1st. We used check number 290. This was posted to account number 5110 in our ledger. And if you look down here, here's the ledger page it was that it was posted to, and this is purchases. It was a debit for $575. Purchases is a cost account. It's like an expense account that it has a normal balance of a debit. And then we paid cash, right? Because this is the cash payments journal. So we paid cash of $575, and that's why it's a credit right here. Okay, so pay very, very close attention to what I'm about to tell you. I'm serious. Are you paying really close attention to this? This is a big deal. Okay. Each of these general columns, general debit and general credit, each of these gets posted individually to a general ledger account. Okay, so general ledger accounts, not subsidiary ledgers, general ledger accounts. So each of these gets posted, right? So purchases, if down here we had say that this was for supplies, advertising expense, right? Each of those gets posted individually to the respective account in the general ledger. But then we have the special amount columns. This is a special column. This is a special column, right? Accounts payable debit and cash credit. These only get posted to the general ledger as a total amount at the end of the month, okay, to the general ledger. So cash, this only goes in the general ledger. This is not a subsidiary account. So we will only post cash amount at the end of the month when we total it all up. Remember, we do totals and we go across the totals here. We verify our debits and our credits match. So we will post that total amount down here at the bottom to the general ledger. Remember that the general ledger has account number, and it has two balance columns at the end of the month. Accounts payable debit. Okay, again, keep paying attention. We post, if we have stuff listed in accounts payable debit, we post the subsidiary ledgers by themselves. So each transaction that's part of a subsidiary ledger. So when we have this account title column, and this is going to be to our vendors, when we have a vendor name here, that amount gets posted to each individual subsidiary ledger, right? So say we had Alfredo Lopez here, and we had a debit for $500. That $500 would get posted to Alfredo Lopez's account. However, accounts payable, because remember, this is a controlling account, it does not get posted to accounts payable because accounts payable is a general ledger account until the end of the month, and that's only going to be after we've totaled this column, and it's a total that we put. So we will post each individual vendor in the subsidiary ledger, but we only post to accounts payable one time, and it's the total at the end of the month. Okay, so if you don't understand that, ask for clarification. And so let's talk about now how we're going to do our posting. So we're talking about posting to the general ledger, and hopefully I didn't confuse the words journal ledger in that little diatribe there. So we're posting, and we are posting purchases, and this, again, general debit and credit, so each line will have its own posting to a general ledger account. So purchases, we're going to write the date. This was November 1st. We are going to write the journal page number. It's Cash Payments Journal 21, so CP21. We're going to write the debit amount. The debit amount is for $575, and we write it here. These two columns are for the transaction. This is for the balance. We're going to calculate and write the new account balance. So we had an account balance of $154,000, $154,840.92. Whew. And then we added, right, debit and debit, they add a transaction for $575, and our new balance is $155,415.92. And our very last step is we write the general ledger account number in the post-draft column of the journal. It's account number 5110. We go back to the journal and we write 5110 in the post-draft column. So this 5110 just tells us that purchases was posted, right? That's it. This was not posted, just this was posted. This is very important that you guys understand this difference. We're talking about general journal to a general ledger, right? This was all of chapter 5. We talked about general journals, but there's a difference. Now we have this accounts payable / Foxfire Supply, and in the post draft column we have a slash that tells us it gets posted to 2 accounts. And we'll talk about that portion of it in a minute. But if you guys recall, subsidiary, controlling, right? General ledger, subsidiary ledger. Okay, so this is the same process. Posting is pretty much the same process over and over and over again. First thing we do, we write the date, November 6th. We got that because we looked right here. We write the journal page number. Well, it's the general journal, page 11, so we write G11 in the post draft column. We write the amount, so it is a debit for $210. We come down here, we write our debit for $210. We calculate and write the new account balance, so we had a debit balance of $5,928. We have another debit for $210. We add those, we have a new balance of $6,138.00. And we write the general ledger amount number in the post draft column of the general journal, right? So here's our 1150. We come write it up here, and we'll cover this next one on the next slide. And I know somebody had mentioned to me that they felt like posting was really tedious, and it is really tedious. All of the companies I've worked for, they actually had an automated process, which meant the computers did it, that would go into the journals and do all of the posting. And so it would run overnight, and then the next day you would know what your proper balance was in each of those accounts. So sometimes it would have to be run in the middle of the day, but usually it was overnight. One of the companies I worked for, which was huge, they actually did their postings at several points during the day. So what they would do, because of course it was all based in the computer, is that they would have a time that the computer would cut off and say, okay, no more entries. And so say that it was 9 a.m., right? And it would take everything that had been done until 9 a.m., and it would post all of that stuff. And then they do it again at 1 o'clock, and they do it again at 6 o'clock. And so you knew that at those times, within about 15-20 minutes, at those times you would have an updated balance on each of those ledger accounts. So I know this is tedious. It's important that you know how to do it, and don't forget that somebody had to write the software, somebody had to write the code that does that posting. So I know some of you guys are like, well, why do we have to learn how to do it if a computer does it for us? Well, because somebody has to know how to do it so the computer can learn how to do it, right? Right. Okay, next slide. We're going to be posting a credit entry from a general journal to a general ledger. So if we look here we have our accounts payable, right? And by the way, if you noticed, let's go back a slide. If you notice, we'd already posted this $250, right? We posted this to the subsidiary ledger already. So we are worried about the accounts payable. We're worried about the controlling account at this point. So these are general ledgers. We're posting the general ledger, right? Not the subsidiary ledger. This was already posted. So it's the same process. We write the date, November 6th, or just the 6th, right? We just need the day because the year and the month are already there. We write the general journal page number. It came from general journal, G, page 11, so G11. I'm clicking random buttons. We write the amount. It was a credit for $210. In the credit column, we write 210. We calculate and write the new account balance. So we had a credit balance. This is an accounts payable. We have another credit. And so we add those together. So we had $12,984. We had a credit of $210, meaning that we were increasing our accounts payable because we bought supplies for the store. We bought them on account, and we bought them from Foxfire Supply. So we're increasing the amount of money that we owe Foxfire Supply. So we add those together, we get $13,194.00. And the last step is we write the general ledger account number. Here's our account number. Now, since this is a slash, the top piece applies to accounts payable, the bottom piece is Foxfire Supply. Foxfire Supply is done, so we want to be on top for accounts payable. And that is the end of 12-5. Thanks for bearing with me, guys.